What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had another relatively flat day in the stock market as we continue to see consolidation and sideways price action. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, first up on SPY, we did go down today 0.09%, even though we did have a really nice gap up open. As you can tell from the candlestick, we gapped up around $422 and closed below that critical resistance level at 420 yet again. So as you can see, SPY is just trading sideways and continues to fail to close above this $420 resistance level. That is a very critical resistance level that the bulls need to get a price action close above in order to show that this is going to be a bull market and we're going to new all-time highs. Remember, until we get a close over 420, we are not looking ahead to the next price targets at 423 and 425. Those targets are above 420, so we need to get a close above 420 for those price targets to be validated. So right now, we're still stuck at that price target at 420, and that is the critical resistance level we need to continue to pay attention to. Now we can definitely see we have the benefit of a bull trend because all of these moving averages are still stacked to the bull side. The only downside is that the 20 simple moving average is relatively flat and it does not yet have a positive slope. But all things considered, the trend is bullish and that should help push the price action higher. Now that 20 simple moving average is also our most critical support level, which is right around $416. So we still have the same critical resistance at 420 and the same critical support level at 416. Above 420, the stock market's going to be looking a lot more bullish, and below 416, we're going to be looking for a possible next leg lower to finish out this correction. Remember, until we get above 420, it is still possible we're in a correction and we just don't yet know it. Remember, we still have a lower high situation, so even though it is a bullish run from the lows, we have no validation of the bull market just yet. Also, don't forget we have this gap to fill down here at 411 and another gap to fill at 400. So if we do start breaking down below 416, those are going to be the most likely price targets to pay attention to because as we know, gaps typically get filled. It's not a matter of if these gaps get filled, it's just going to be a matter of when. So right now the bulls have the benefit of the price action and the trend in their favor, so the bears would need to prove something to the bulls by getting a price action close below those support levels. On the triple Qs, we went down 0.33% today, and again the triple Qs are struggling at their critical resistance level of 334.6. That level is very important, just like SPY 420. And as you can tell from the chart, the triple Qs are just trading sideways below that resistance level. In the meantime, we can also see another breakthrough with the moving averages is that the 20 simple moving average has now crossed below the 50 EMA. That 20 simple moving average is still negatively sloping, which does imply momentum is still in the downward direction for the triple Qs. So the triple Qs no longer have the benefit of a full bull trend, and that's because the price action could not get above critical resistance and those moving averages are starting to flatten out and they're really not going to the bulls' favor. So this is very critical because remember the tech sector led the way during this correction back here where we dropped about 8% from the all-time highs. Remember, we have a lower high situation and we're trying to see if the triple Qs can stay above a lower low situation. So right now we have a lower high and we're waiting to see if the market is going to blast through resistance and continue to run higher to a new all-time high or if it's currently rolling over and getting ready to break down through support. So the critical support levels you need to watch on the triple Qs are also going to be the 20 simple moving average and the 50 EMA, and that level is down here around $328. The first warning sign that the triple Qs are rolling over would be a price action close below 332.5. However, you need to see the price action closing below about 328 to get the confirmation that the triple Qs did roll over and they're heading much lower. On the triple Qs, we also have gaps below at 323 and 315. And again, those gaps will likely get filled. It's just a matter of when. Now, if the critical resistance at 334.6 does break, our next price targets above are somewhere around 337 and 339. Those are also very strong resistance levels. So even on a price action break above 334.6, we could still see the price action stalling just above in the high 330s. We can also see the volume is still relatively low, so we don't see a lot of buyers and we don't see a lot of sellers. Part of the reason the market is just going sideways is because we just don't have high volume buying or high volume selling in either direction. So right now the benefit is still in the bulls' favor. However, there's still warning signs we need to pay attention to, like the price action continuing to fail to break above this critical resistance level. Next up is the Dow Jones ETF, which went up 0.07% today, and the Dow Jones did close that gap today right around 347.6. The Dow Jones gapped up all the way up to about 348.5, but gave it all back and closed below resistance, which is right around 348. As we can see on the Dow Jones, we definitely have the benefit of a full bull trend, and that should help push the price action higher. We still have critical resistance at 348 and 350, and remember the 350 would be sort of a double top scenario. We got there before and then we saw selling, and right now we've closed the gap above and we're getting very close to those levels, which could lead to a double top. Remember, in a double top scenario though, it's not a double top until we break the neckline, which is all the way down here around 336. So we can't call it a double top prematurely, but it's definitely something to pay attention to because Dow Jones levels of 350 are very similar to the other levels on SPY and triple Qs that we're also seeing the price action fail to break above. But right now you have to give benefit to the bulls until proven otherwise, and the price action and the trend are still bullish on the Dow Jones. So continue to watch for a break and close above critical resistance at 348, and that will validate our next price target of 350. The critical downside support for the Dow is 343, and if we break below 343, we still have plenty of support below at 341.7 and the 50 EMA at 337.5. On the Russell 2000, we went up 1.14% today, and the Russell 2000 is right back into that resistance trendline level of 228.5. We have downside support now at 227, and we do have a gap to fill below at 223.75. We can see the Russell 2000 is very close to going back into a full bull trend, but the 20 simple moving average is still trading below the 50 EMA, so there is still no full bull trend just yet. However, we can see that 20 simple moving average is starting to curl back up, and it could be positive sloping very soon. So look for a breakout on the Russell 2000 above this critical resistance trend line at 228.5, and we will still have resistance levels at 230 and 234. The critical downside support level for the Russell is all the way down here at the 20 simple moving average at 221, and that's also where our support trend line is. If we break out of the support trend line, we could be coming back down to 215. On the Arkk ETF, we went down about 0.75% today, and we can see Arkk is still struggling to close above that resistance level at 112.68. We also have the 50 EMA, which is going to be another resistance level right around 115. Remember that Arkk is trying to get out of a bear market and has been forming lower highs and lower lows since February, and it's just now trying to break the bearish trend. If Arkk can't close above the 50 EMA for a few days in a row, it's still going to be in a bear market, and it's just forming a lower high after a lower low, and it's just going to continue down for another leg lower. So don't get caught in this trap, and if you're trying to go long on Arkk, you have to be patient and you have to wait for the right setup. Right now, if Arkk gets rejected at these resistance levels, we could be coming all the way back down to about 97. We will have support levels to watch above at 109 and 106, but if those levels fail to hold up, Arkk could retest 97 and possibly break below it and head even lower. So pay close attention to these resistance levels, because if Arkk continues to fail to break and close above them, we could be going down for another leg lower. Also note Arkk has very low volume, so it's just sort of in that indecision point, and we could be seeing another huge wave of selling around the corner. So be patient and understand that Arkk is still in a bear market, and we would need to get back above 115 to start reversing the trend. On VIX, we see fear coming back into the market today, with the VIX going up 6.68%. The VIX closed at 17.89, and it did fail to break above that resistance level at 18.2. As you can tell, the VIX did find support at our new support level, which is right around 16.65. The VIX bounced off that level, but the VIX could still continue to go lower as soon as tomorrow. So right now we need to respect the fact that the VIX is bouncing off support and continue to watch resistance at 18.2. The VIX will also have resistance at 20, and if the VIX gets back above 20, we'll know that the correction is likely not yet over and we're going down for another leg lower. If the VIX stays below 18.2 and continues to head lower, that's going to verify that we're going to new all-time highs, because remember, the VIX is a measurement of fear, and if fear continues to leave the market, we're more than likely going to try to make new all-time highs in the very near future. So watch the VIX closely and know your critical resistance levels at 18.2 and support at 16.65. On gold, we are relatively flat for the day, and we continue to see the price action holding up above that 5 EMA, and we still have a very strong bull trend on gold. Look for the price target above at 1923 with downside support at 1900 and 1876. On silver, we tried to break out today, and you could see at one point we were well above the upper Bollinger Band, but gave it all back and closed right back down at that support trend line. Remember, silver is still trying to break out, and it's struggling to do so. It still has the benefit of a full bull trend, and the price target above is going to be $29 with downside support at 27.9 and that 20 simple moving average at 27.67. Right now, Bitcoin is currently down about 2.5%, and we can see Bitcoin did fail to break above that resistance level at $39,000. As I've said before, don't expect Bitcoin to just start going flying back to new all-time highs after this massive crash. This is not something that Bitcoin is going to recover from very quickly, and it's going to take a lot of repairing on this chart to go back into a bull trend. We could see Bitcoin is still in a bear market, and it still has a bearish trend, and it's still forming lower lows and lower highs. So right now, watch the critical resistance levels at 39,000 and 43,000 because Bitcoin needs to start closing over these levels to reverse the bear market. Right now, as long as Bitcoin is in the bear market and getting rejected at resistance, we're looking below for support at 30,000 and 27,000. If Bitcoin breaks below 27,000, it could be going all the way back down to about 23,000 or $20,000. So this is not something you need to get fear of missing out in because Bitcoin is not going anywhere anytime soon, and we will see it in the price action and we will see it in the trend when it does reverse and it does start to go back to a bull market. On Amazon, we were down 0.14% today, and Amazon continues to hold up above that support level at 32.09. If 32.09 fails, we'll be looking for support at 31.38. We have upside resistance at the 50 EMA at 32.50, and the resistance trendline breakout level is now at 33.40. Remember, if Amazon can break out of the resistance trendline, it could start running back into a bull market, but we don't want to look ahead, and right now, Amazon is still struggling and it's still consolidating and waiting for its next move. So look for a break below support or a break above at resistance to get a hint at where Amazon is likely going in the near future. On Tesla stock, we were down 0.21% today, and Tesla is still struggling at that resistance level at 626. Tesla looked like it wanted to break back above, but it's been struggling ever since. And right now, Tesla is just consolidating over that 20 simple moving average and hanging around resistance. If Tesla can break above 626, the next resistance is going to be the 50 EMA right around 651. As you can tell, the moving averages are not stacked to the bulls or the bear side, so right now the price action at these critical resistance levels is going to be the most important. We could see the volume dying off a little bit, and we are starting to see the price action holding above that 20 simple moving average. However, if Tesla does start to break down and it gets back below 614, we're likely going down for that final leg lower, which could send Tesla much lower. So watch for support at 594 and 557. And remember, I said it before, if Tesla breaks below 557, you want to get out because it is likely going back into the 400s. However, we need to watch this level closely because it is a very strong support level, and there's no guarantee it actually will break down. Next up is Apple stock, which dropped about 0.25% today, and we still see Apple struggling. Remember, Apple's in a full bear trend, and all of the moving averages are stacked to the bear side, and the price action is definitely seeing that pressure, and it's getting pushed lower. We see the price action struggling to break above 126 after we failed to break above 128. So we see Apple slowly climbing lower, and the next critical support level is going to be 123. If 123 doesn't hold up, Apple is very likely coming back down to 119, which could send the rest of the stock market lower with it. So remember, right now Apple's in a bear trend and the price action is holding up below a negative sloping 5 EMA, and that is not what you want to see if you're bullish on the stock market. So watch Apple very closely, and as you can tell, it's also trading in a downward channel, which means it's in a bear market trend and it needs to break out before it can reverse this trend and go back into a bull market. On the financial sector, we were up 0.61% today, and the financial sector continues to look strong, closing above the 5 EMA and still holding on to the full bull trend. The industrial sector was up 0.39% today, and again, the industrial sector still looks really good, closing above the 5 EMA and still maintaining a bullish trend. The healthcare sector dropped 1.64% today, and it did close below that 20 simple moving average, and it's getting very close to retesting support at the 50 EMA. The healthcare sector is losing its bullish trend, but it is coming into a very critical support level. On the energy sector, we went up 3.85% today, and we do see the energy sector trying to go back into a bull market. The price action is well above the 5 EMA, and we see the moving averages are very close to being stacked to the full bull side. So going back to the S&P 500, we are still waiting for this critical price action break of resistance or support to see which direction SPY is going to go. Are we going to make brand new all-time highs, or are we still in a correction and we're due for another leg lower to finish out the month of June? Watch the price action at 420 for critical resistance and 416 for critical support to get an early indication of which direction this market's going to go. As you can tell from the sectors and the VIX, we are definitely seeing a mixed bag, and we still see strength in the sectors, but we also see some signs that some of them are rolling over and they could be heading lower after they complete this rally. Remember, on the Stocks Channel Discord, I'm giving you intraday updates and analysis to help you navigate this market and stay on the right side of the trade. I'm also bringing new trade ideas to you weekly to help you crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you all enjoyed your long weekends, and as always, I will see you in the next episode.